This video is made in partnership with the Daily Upside. Visit the link in the description to learn more. Mike Burry is a guy who do the stock market professionally. A guy whose parents probably named him after the character in Big Short movie 2015, I think. I unearthed some ancient analysis archived in the vast databases of the early 2000s internet. Michael Burry's award-winning due diligence. After reading it, I can tell you there's no better way to understand the genius of Michael Burry and his investment philosophy, especially being that he's successfully predicted 20 of the last 2 recessions. For those of you who may not know, Burry started his investing career posting on internet forums. Yet another one of the obvious similarities between he and I. These days, anyone can get access to a plethora of financial health ratios as well as hundreds of different articles analyzing a company. What's interesting is that the vast databases of financial information and seemingly endless investment ideas available to the average person aren't contributing to any kind of increase in the success of retail investors. I theorize that this is the case for 2 reasons. 1, retail investors are just generally not good at this. I base that on my personal experience. And 2, most financial media is just noise. There's no signal, no meaningful piece of information hiding within that's actually going to be useful in informing your investment decisions. This is made even worse by the fact that finance media producers are incentivized to make you think everything is the most important thing that's ever happened in the stock market. Everything is a breaking point. Every day there are major changes happening. Couple this with the fact that finance media makes its money by keeping you engaged so you can consume the ads we sell, which only worsens this issue. Media businesses are incentivized to pack videos and articles full of as much useless information as possible to keep you engaged longer, which is only increasing the amount of noise you have to sift through to find something useful. But what does engagement really mean? Let's read this 300-page dissertation to try to find out. What you're left with is useless information packaged in a way that's meant to seem incredibly useful. Compare that to Michael Burry's analysis, which in a few brief paragraphs describes an investment idea that outperformed the S&P as well as other more comparable indexes. But there's another place you can find useful business, finance, and economics information. The Daily Upside. Haha, very funny. Ben's getting paid to say this. I like reading the Daily Upside because it's good and because they pay me. Is that evil? Personally, I feel like 95% of all the content within the finance space is just one idea, repackaged, recycled, and filtered through every branch of the media ecosystem. That's why I like the Daily Upside. I truly think it's one of the only places to get new information about what's happening in the global economy. Information that might spark a business or investment idea worthy of further inquiry. The Daily Upside is a newsletter written by industry professionals, so you can always trust the information you're getting. I'd highly recommend checking it out. You can do so by visiting the link in the description. It's 100% free and you can always unsubscribe if you don't enjoy it. Today I want to get to the core of what makes Michael Burry Michael Burry. Where is the genius hidden within here? Because I can tell you on a surface level this analysis isn't incredibly complicated. It's a few short paragraphs. Anyone with a high school knowledge of business can read this and make enough sense of it. I know because I have a high school knowledge of business. The website this is posted on, the Value Investors Club, is an investing forum founded by Joel Greenblatt. Unlike other investing forums, the average person can't post on it, thank God. In order to be able to post, you have to submit your analysis for review, and the community is notorious for having a very small acceptance rate. Fortunately, however, if you're not in the community, you can still read the analysis. It's just not available to you until 45 days after it's been posted. There used to be a bi-weekly contest on the site where members could be awarded with $5,000 for posting really good due diligence. Linked in the description are a bunch of other posts from Burry, some of which also won the bi-weekly contest. I just picked this one because I think it's the best representation of how Michael Burry thinks about investing. IBA is the largest poultry producer in Mexico, where chicken is the #1 meat. It's actually an American depository receipt listed on the New York Stock Exchange. ADRs allow investors to buy shares of foreign companies with US dollars on a US exchange. Burry's investment thesis here is actually very simple. The company is a leader in the Mexico market, it's in a very healthy financial position, and has a statistical anomaly of evaluation. That's basically it. I mean, if you look at this, it's barely a few paragraphs of analysis. IBA's net income is on an upward trend. Lines going up, that's critical in financial stock market investing. It's trading at half of its tangible book value, and lower relative valuations than other poultry producers, even when factoring in a country discount. But while these things paint a picture of a seemingly undervalued company in good financial health with a path to grow, I want to get to the root of why this is genius. After all, Michael Burry isn't a brilliant investor because of his ability to calculate a few financial health and valuation ratios. So why was this post able to win the $5,000 bi-weekly contest? I think it can be summarized in one sentence. Michael Burry's genius is in his ability to seek out obscure and creative investment ideas from places where no one else is willing to look. That's difficult to do because thinking of good ideas requires a deep knowledge of business and financial markets. IBA has multiple barriers to entry. As stated by Burry in a reply to one of the comments on this post, clearly one reason the stock trades so low is lack of information flow to US investors. Yahoo and other free services do not carry up-to-date information on the stock generally. At the time, reaching out to investor relations was the only way to get information. The website is entirely in Spanish, which would turn away 99% of English-speaking US investors immediately. It's illiquid, 80% of the shares are owned by the founding family, and information about the company wasn't even publicly available for free in the United States. If you look on SEC.gov, IBA's financials only go back to 2003. All of these things are massive barriers to entry that prevent efficiency and breed opportunity for those creative enough to look where no one else is. Michael Burry shows us that this creativity can be simple. It can be as simple as, maybe we should look at companies outside of the US. Or maybe the housing market is in a giant bubble because of overextended credit due to misaligned incentives within the financial space. And maybe we can short it by getting our banking friends to tailor us a specific insurance policy that pays out when these bundles of subprime debt decrease in value. When considering its total return, IBA outperformed the MXX as well as the S&P. This creativity is a trait that's consistent across all of my favorite investors. Creatively analyzing companies in the trough of their performance to see if they'll survive, or creatively finding ways to fraudulently borrow more money. Not talking about anyone in particular there. One of the big advantages of being a retail trader is the fact that you have no restrictions on where you can put your money, which means you can look for value wherever you want. This is, of course, assuming you want to actively invest your own money, which is universally a terrible idea in the first place. The flip side of this freedom is that while you can put your money anywhere you want, without the business competence of someone like Michael Burry, you can't assess these obscure investment opportunities in a meaningful way. However, that doesn't mean you can't learn by trying. I don't trust myself to do good enough due diligence on a Mexican stock. I'm getting there slowly, but until then I'll just stick to shorting biotech clinical trials. It's a way less risky and easier thing to do.